Choice Properties, and we're back for another Mortgage Monday with Angie Wozniak from Midwest Lending. So thanks for joining us.
Thanks for having me, as always.
Of course, happy to be here. So my question for you is about hard credit checks. When do you check somebody or pull somebody's credit? When they're starting the pre-approval process or the mortgage process, what does that kind of look like?
Sure. So to issue a pre-approval, there is a credit pull. That is part of the application process. So it's generally fill out an application, we do credit to see where we're at. Of course, we want to do that to figure out what loan program is going to work best and really start tailoring that mortgage strategy.
Is it a hard inquiry as well?
It is a hard inquiry. So it's different from buying a car. When you buy a car and they pull your credit, 6 different times for all of their financing options.
Mm-hmm.
But it depends on the consumer, but generally pretty minimal. It's a few points. So the window for that to stay on your credit as the hard inquiry is about 120 days. So you'll see an initial small hit to it. It's going to last on credit. You might still see it as a previous inquiry, but it's not going to be negatively impacting you beyond 120 days. The reports are good for 60 to 90 days, depending on the lender.
Mm-hmm.
And the other thing to note is that if you are shopping lenders, there is a 30-day sweet spot. So if multiple banks pull your credit within the same 30 days, there's no additional impact to credit. So if you're shopping around, make sure you're doing that within a pretty close time frame, so that you're not seeing any additional negative impact to credit.
Awesome. Great info as always.
Thank you.
Well, we will be back next week for another Mortgage Monday. If you have any mortgage-related questions that you'd like to know specifically, you can DM any of us, and we're happy to answer it on one of the upcoming Mortgage Mondays. So, thanks, Angie.
Thanks. Bye, guys.
Bye.
Bye.